Hey, what's up, everyone? Welcome to Overarch, where we cover AI markets and digital finance/slash crypto. So you might be asking yourself why those two together, and it's because we believe that these new technologies are building the financial infrastructure for the next economy. So every week, we're going to break down the trends, the companies, and the opportunities that's shaping our future. So today we have three main stories we're going to discuss, and the first is how SK Telecom, the South Korean corporation, got pulled in to the rising tensions between the US government and Anthropic over Fable 5. Then the second story is how leading AI companies are competing over top research talent, paying out hundreds of millions of dollars. And finally, on the digital finance front, while all attention is on the Clarity Act moving through the Senate, the more consequential development may be what's happening to Genius as regulators turn the already passed law into operational requirements. So right now, the biggest story in AI markets is how the US government forced Anthropic's hand in taking down Fable 5. So if you've been following the story, then you know the Department of Commerce suspended all foreign nationals from using Fable 5, which made it impossible for Anthropic to keep it up publicly for their users. Since there is no wide KYC in their ecosystem that could enforce such a ban. I mean, they even stated that they have foreign nationals working within their company. So before all this went down, Anthropic was giving out Mythos 5 to some of their enterprise partners because they wanted them to use it to secure any code vulnerabilities on their platform and products. So Anthropic, they created a controlled access program called Project Glasswing, where they gave Mythos 5 to trusted partners, and SK Telecom, a major South Korean corporation, was one of those participants in the later stages of the program. So US officials subsequently raised concerns about SK Telecom and alleged China connections, and the White House asked Anthropic to revoke their access. And then Anthropic complied immediately. And then SK Telecom publicly denied having any alleged ties with China. So what's missing from public reporting is what specific evidence the US officials relied on and whether those concerns were shared with Anthropic before access was granted, and whether Anthropic performed diligence and reached a different conclusion, or whether the concerns emerged only after SK had already been approved. So if you've been following the story in the media, then it becomes kind of clear that as the US government were finding issues with the rollout of Fable 5 and Mythos 5, that Anthropic was trying to comply immediately and not cause any problems that the US government saw as national security concerns. I think that the media is kind of trying to frame the relationship and how these events unfolded as some kind of like friction between the two, because it follows the narrative of what was going on between the administration and Anthropic in February, with how Anthropic wanted to impose restrictions in their contract with the Department of Defense, with the US government, in that they didn't want the government to use their products for killing in the battlefield and also for public surveillance of citizens. That could definitely be some of the context of what's going on between the government and Anthropic right now. They're being more diligent on Anthropic's products and who have access to them. But it also seems like the US government does have maybe legitimate concerns with national security and Anthropic's products, and that they're just voicing them to Anthropic, and Anthropic is immediately complying, right? So we don't know yet for sure what evidence there is between SK Telecom and China, but if there is, like, I don't think it was a situation where Anthropic knew beforehand and they knew that the US government would be objecting to them giving Fable 5 to SK Telecom, but they were doing it anyway. It seems like they didn't know, and then the US government, when they were maybe reviewing the product rollout, they also realized that there might be an issue there with SK Telecom. So as soon as they notified Anthropic, they revoked access, right? It wasn't like there was a back and forth argument about whether it was necessary or whatever. It seems like they did it immediately, right? And it seems like the same thing with the Department of Commerce banning foreign nationals from having access to Fable 5 because they learned that these jailbreaks might have some kind of vulnerabilities that could be an issue with national security. Even though Anthropic has come out publicly and said that those vulnerabilities were known and minor, they still immediately took down Fable 5 so that nobody has access to it following the directive of the US government. So if you look at how this is being played out, it seems like maybe the media is trying to make a bigger deal than what is actually going on, like trying to make it dramatic between these two, like the government and Anthropic, and how they're kind of like on opposing sides to something. While the bigger takeaway isn't that this isn't really about SK Telecom, it's that the frontier AI is increasingly being treated like a strategic technology than a software product by the US government. And if the government is willing to intervene who can have access to the most capable models, then AI may end up following a path similar to advanced semiconductors, where geopolitics matter more than the technology itself. And then that dynamic might accelerate like the emergence of separate AI ecosystems, where companies and governments outside the US may become less comfortable like building critical products, enterprise products on top of American frontier models if access can be restricted or revoked. And at the same time, Chinese AI labs continue to narrow that intelligence gap with the US frontier models, right? So if you look at like Z.ai's recent GLM 5.2 release, it's another reminder that the competition is getting very close. The difference between these LLMs are becoming smaller, and the span where they're being developed is becoming shorter, like the quality of their development is becoming shorter. These models are being distributed as open weights under like the MIT license so that anybody has access to them, right? And that there is no government that can control who has access to them, right? So if the quality of intelligence and that time period of developing them becomes like even shorter, where some people are saying it's like 6 months and it becomes shorter to like 2 months, 1 month, then I think, whatever the US government thinks that they have control or power over becomes negligible in terms of like these export controls and, these trying to suspend or deny access to individuals or entities to certain models. All that becomes another area of like platform risk. Then you're going to see more people and companies and governments just relying on these open source models. So these open weight models, they have their own issues because these companies like Z.ai and DeepSeek, they can change the licenses as time goes on, right? So like the release models will always be under the MIT license and be open weights, but future models could be under a different license, right? So it won't be open weights, or they can change their pricing plans, the versions that most people use, which is cloud hosted and stuff. Taken together, the story suggests that the AI race is no longer just about who has the best model. It's like increasingly about who controls access to these models and whether the world ends up with one global AI market or several competing AI blocks. The second story, AI companies are competing aggressively for top research talent as the race to build more capable model expands beyond chatbots into areas such as scientific discovery, reasoning, and autonomous agents. So in the latest example, right, is AlphaFold co-creator and Nobel laureate John Jumper announced he is leaving Google DeepMind for Anthropic, while Gemini co-lead Noam Shazir is departing Google for OpenAI less than 2 years after Google spent roughly $2.7 billion to bring him back from character AI. Anthropic also recruited Andrej Karpathy earlier this year. So basically, this competition is reflects it's like a growing belief across the industry that a relatively small number of researchers can have a huge impact, like influence on model architecture, training methods, and also like breakthrough capabilities. So as a result, these companies are bidding against each other and even poaching to get this research talent into their fold, right? And compensation packages have escalated dramatically. Sam Altman has said Meta offered signing packages worth up to $100 million, while OpenAI reportedly averages around $1.5 million in annual stock-based compensation per employee. So for investors, the trend highlights that frontier AI remains as much a talent race as a compute race. While access to GPUs and capital remains important, leading labs increasingly view elite researchers as a strategic asset that can shape the direction of the company and accelerate its progress. So these talent wars are also going to have implications for their eventual IPOs. Public market investors, they generally favor companies with strong employee retentions and them being able to attract top talent, right? So labs that can consistently retain top researchers may command higher valuations because investors view their talent base as part of the company's moat. And at the same time, frequent movement of high-profile researchers between labs raises questions about key person risk and whether a company's advantages resides in its platform and infrastructure or in a relatively small group of individuals. And the third and final story is an update on the biggest development affecting the digital finance crypto markets. Its attention has focused on Clarity Act's progress through the Senate, but the more consequential development for markets may be the rulemaking now building on top of Genius. So last week, the Federal Reserve and multiple banking regulators proposed rules requiring payment stablecoin issuers to implement bank-style customer identification programs. So this is one of the clearest signals yet of how U.S. regulators intend to oversee the stablecoin ecosystem in practice. So like crypto regulation is moving from broad legislative frameworks to operational requirements. So for like years, we had to debate was whether stablecoins would be regulated. And the question now is how closely they will resemble traditional banking products. So the proposed rules point toward a model where issuers operate under compliance standards closer to banks and payment companies than to crypto startups. So for markets, this could accelerate the institutionalization of digital assets, and that would mean clearer compliance standards, which would make it easier for banks and payment companies, asset managers, and public corporations to participate in stablecoin infrastructure. And the rules would embed identity requirements at the issuer level, is where stablecoins are minted and redeemed, which narrows anonymous entry into the regulated system. But they don't reach activity once tokens move on chain, so DeFi itself would stay permissionless. But with KYC at issuance, most stablecoin dollars entering DeFi now carry an identity anchor at the source. So a central question that would remain unresolved would be whether stablecoins be allowed to compete with bank deposits through yield. So the Genius Act, signed into law in July 2025, already prohibits issuers from paying interest or yield to holders, while leaving room for transaction-based rewards. The open fight now is that the ban applies only to issuers and not to exchanges or affiliates. So a three-party model where an issuer funds an exchange that rewards the holder currently sidesteps it. So banks want the Clarity Market Structure Bill to extend the prohibition down to the exchanges. So crypto firms are calling that anti-competitive, and the stakes are concrete. A Treasury Advisory Council flagged roughly $6.6 trillion in transactional deposits is at risk from stablecoins against about $281 billion outstanding as of March 2026. So the main takeaway here is that crypto's next phase may be shaped less by token speculation and more by the build-out of a regulated on-chain financial system. The likely winners are stablecoin issuers, payment networks, custodians, and tokenization platforms that can operate within the framework rather than the more speculative corners of the market.